I was listening to Jeff Booth when he said this.
You have an open, decentralized, secure protocol bounded by energy. And that's my kind of 5 criteria on what this is. But that system bounded by energy will reprice all $900 trillion of assets. All. So what does that mean? So you take that $900 trillion today of purchasing power, not $900 trillion of paper money, of purchasing power, and you divide it by 21 million. That number equals 43 million. Approximately 43 million of purchasing power in today's currency of Bitcoin.
Then he said,
but what would happen from that system? From that system, you're living in the first global free market that has ever existed.
Orange pill or blue pill moment? I didn't believe him. So I did what I always do. I tried to prove him wrong. Give me the next 2 hours and I'll show you exactly what I found. First, I'll show you the exact problem, why women are having fewer children, why your salary buys less every year, why we're getting sicker despite better medicine. Then I'll show you what a global free market actually looks like. Real people already living in it, like Rob and Sylvia in Madeira. Sylvia stopped working years ago because their savings buy more every year instead of melting away. Once you see that world, then we'll figure out if Bitcoin actually gets us there. I'll attack those 5 properties one by one. Decentralized, open, protocol, energy bound, secure. Dopes. No single entity can change the rules. Anybody can use it, no permission needed. There can only be one global standard, like with the internet. It can't be faked digitally, tied to the physical world, and it can't be hacked or compromised. So here's the test. If something has all 5 of these, how could it not be a free market? That's what I tried to disprove. But first, let's start with why the current system is broken and why it's accelerating. So your granddad bought a house on a teacher's salary in 3 years. You need over 7 years today, assuming prices don't keep rising. But here's what they don't want you to know. Your money should buy more every year, not less. And there's a specific moment when they broke this system. So what actually happens when money works for everyone? I've spent the last 10 years going down way too many rabbit holes about money. And 3 discoveries change everything. First, there's a specific moment when money's natural system got completely broken. And I can show you the before and after. Second, what happens when all 8 billion people start competing to make your life better instead of a few hundred taking from everyone else? Third, this is already starting to happen in ways that sound impossible. But this isn't just about money. It's about whether your kids will ever be able to afford a home and the type of world they'll live in. So here's the first thing that blew my mind. I first heard about this idea from Jeff Booth, the author of The Price of Tomorrow. But it took me years to really get it because it's the complete opposite of everything we see.
You almost have to say it 1,000 times to yourself. The natural state of the free market is deflation. Yeah. Which means you've never lived in one. No, never.
In a natural free market, everything should get cheaper every year while getting better. I know that sounds crazy. We're so used to inflation that the idea of deflation sounds like a disaster. But here's the thing. Deflation with our current monetary system actually would be a disaster. That's because our system needs constant inflation to work. It wasn't designed to work as a global free market. It's designed for something else entirely, which I'll show you soon. But first, let me show you why things should cost less each year in a true free market. Think about your smartphone. In the 1960s, you could buy a calculator called the Sharp CS10A, costing $1,500. That's about 14K in today's money. Today, your phone can solve any math problem the Sharp could and access way more through the internet, and it's basically free. Here's what clicks for me. Every year, humans get better at making things. Better technology, smarter processes, better designs. Farmers learn how to grow more food with less work. Car makers figure out how to make cars safer with fewer materials. Engineers design phones that are more powerful but cost less to make. This improvement should make you richer by making everything cheaper. That's how the world is supposed to work. Your money should buy more each year, not less. But our world does the exact opposite. I found this perfect example from Mike Maloney's series, The Hidden Secrets of Money.
This is my father. He was manager of an auto parts store, and here's his tax return from 1955.
He made $9,600 per year, paid 12% in taxes, and the average home cost, $8,500. He made more per year than his house cost. Today, that same job pays $70,000 with 25% taxes, but houses cost $415,000. Instead of making more than a house costs, he now makes only 20% of what a house costs. But here's what really got me. We've had 70 years of amazing technology improvements since 1955. We have power tools, robots, better materials, and computer design. Building a house should be way cheaper today, not 50 times more expensive. So what happened? Now, I want to be clear, the world before 1971 wasn't perfect. There was still plenty of government control, limited global communication, and most people couldn't participate in global markets like we can today, thanks to better technology. Even the gold standard had major problems. Governments took gold from citizens in 1933. It was better than what we have today, but governments could still control it. Now, I know all this inflation, deflation thing sounds a little bit confusing, so I just remembered a talk I saw in Bitcoin Prague by Dominic Frisby. Let him explain this a little bit better.
What you see here is the consumer price index in the UK and the US over the course of the 19th century when money was gold. And over the course of the next 40 years when money was sound, you saw that prices more than halved. In other words, the same wage over the course of that 40 years would have bought you double as much.
And that is an example of what happens in a sound money system. Throughout history, they'd slowly make currencies worse by mixing in cheaper metals or printing more paper currency. It may look different across cultures and centuries, but every government has eventually done the same thing to money. Slowly debase it until people lose faith and it becomes worthless. Don't believe me? In 1971, Nixon removed the US dollar and every currency from gold. And here's the thing, they knew exactly what they were doing. Catherine Austin Fitts, who worked with President Bush in the late 80s, exposed this perfectly.
He said, we are going to hollow out the middle class in the West, and we are going to devastate our culture. All to make
culture?
Money. Yes, our culture. We're going to devastate our culture.
The system wasn't broken by accident. It was designed for extraction, not abundance. Now, I've got to be honest, when I first heard this, it didn't really click for me. But when you really strip it back to first principles, inflation is theft. And I'm going to prove it to you. If I printed £20 notes in my spare room and then bought my weekly food shops, that would be called theft. When the Bank of England does this exact same thing with billions, they just call it quantitative easing. And here's the proof. With £1,000 in your savings account in 2020, you could buy about 10 weekly food shops at £100 each. With that same £1,000 in 2025, you can only buy about 6 weekly food shops at over £150 each. So who stole the 4 weekly food shops? Here's exactly how the theft happened, and this is directly from the Bank of England's own documents. First, the Bank of England announces quantitative easing. Next, the Bank of England buys bonds from asset managers and investors. Third, these people now have cash instead of bonds. Fourth, they use this cash to buy houses, stocks, and other assets. Fifth, asset prices jump. Sixth, your weekly food shop rises. And then seventh, your wages rise maybe 12 months later, if you're lucky. And each time they do this, they call it something different and use different methods to try and keep people confused. But it always has the same effect because they receive the new money first. Look, this is the definition of theft: taking someone's property without consent. Your property is your purchasing power. Without consent, you didn't vote to devalue your savings. Taking the new money diluted everyone's existing money. You worked for that purchasing power, but they printed it and spent it before you even knew what happened. That's not economics, that's theft. This is essentially the Keynesian versus the Austrian economics debate, and you can learn way more about this in books like The Bitcoin Standard. And this is exactly the opposite of natural deflation. Instead of technology making things cheaper for you, money printing makes everything more expensive.
And then over the course of the 20th century, something happened. Money changed, it became fiat, and suddenly the consumer price index has gone absolutely bananas.
I saw Jack Mallers speak at Bitcoin Prague, and he shows this data perfectly.
This is the 95th percentile's growth in wealth versus the rest of us. All in 1971, that's weird.
And the social breakdown doesn't stop there. People are waiting longer to get married because they can't afford to start families. Divorce rates are skyrocketing as financial stress tears relationships apart. We're eating less real food and more processed junk, with childhood obesity tripling. Birth rates are plummeting as people can't afford children. And even more people are going to prison as financial stress pushes them towards crime. So instead of technological progress making you richer through falling prices, money printing makes you poorer through rising prices. Our wages simply cannot keep up with the amount of money being printed and pumped into certain assets. The wealth gains that should benefit everyone get captured by whoever gets the new money first. And here's the crazy part. We live like kings compared to people 100 years ago. We have smartphones, the internet, GPS, cars that are way safer. We've made incredible technology progress. But instead of feeling more wealthy, we're more stressed than ever. Jack's data shows
There are more people 18 to 29 living in their parents' house because they're depressed and they're jobless and they're in debt than there was during the Great Depression. That's weird.
So we have the technology of kings, but the money stress of peasants, because our money system is stealing the benefits of all that progress. So every year we wait to move into a global free market, we're getting poorer while working harder. So what would fix this? Imagine a world where technology actually made things cheaper for you instead of more expensive, where 8 billion people competed to make your life better, where your time became abundant instead of scarce. Sounds impossible? In 2008, something changed. We got money with those 5 specific properties that makes this possible. It's called Bitcoin, and let me show you what this world would actually look like. Feel like the world is rigged against you? It is. But in 2008, something changed. We got some rules that lets 8 billion people trade freely. No banks, no permission. It's called Bitcoin. And the moment you step into it, prices fall. Technology works for you. Time becomes abundant. This world is coming for everyone, but only if Bitcoin doesn't make one critical mistake. Stay with me here because in the next 15 minutes, I'm going to show you the world you're about to live in and the one thing that could destroy it all. Quick context on why everything feels broken right now. There's something called the Cantillon effect that explains why your salary never keeps up. When governments print money, they give it to banks first. Banks lend to corporations. Corporations buy assets, and by the time that money reaches your paycheck, prices have already gone way up. You're always chasing inflation that you can never catch. Throw in government bailouts, subsidies, creating monopolies, and increasing taxes, and that is the rigged system. Bitcoin breaks this model completely. Here's how. It is the first thing ever that lets strangers exchange value globally online without a bank, without a government, without permission. One open network, no CEO, no headquarters, now settles more daily value than Visa. Think about that. A system with no middlemen just outcompeted the largest global payment network on Earth. Now, let me ask you a question here. What rules would money need to have to create the first global free market that has ever existed? Seriously, think about this, because from first principles, I believe it needs 5 things. Decentralized, no single point of control. Open to everyone, one protocol. It can only be this one. Bounded by energy, can't be faked digitally. And secure, it can't be hacked. I'll show you later why only one of these is the real threat to Bitcoin. But when you really think about it, as long as they all keep working, the world I'm about to describe becomes inevitable. And this isn't theoretical. A country smaller than Switzerland just became one of the largest sovereign Bitcoin holders on Earth, using energy that would have just gone to waste. The Kingdom of Bhutan started mining Bitcoin in secret using surplus hydroelectric power, energy that would have been wasted. They didn't announce it, but someone spotted hash huts next to their dams on satellite images. When discovered, They'd been stacking sats since Bitcoin was $5,000. And today, their holdings represent roughly 40% of their entire GDP. As Daniel Batten describes,
the environmental impact is, virtually negligible. It's using 100% renewable energy. It's an asset that would have been wasted, that they have in abundance, and it's creating prosperity for an entire nation state.
They used the profits to increase government salaries by 50 to 65%. Civil servant resignations dropped from 1,900 to 500. They refurbished their airport. Zero marginal cost renewable energy. No IMF loans. Complete sovereignty. One small kingdom, zero permission needed. Now imagine what this could do for 8 billion people. Let me show you what that world looks like. My dad's first laptop cost £4,000. It was massive, slow, battery lasted 2 hours. I remember him being so proud of it. Today, my £500 phone is 1,000 times more powerful, better screen, better battery, weighs nothing, does everything his laptop can do and way more. So let me ask you something. Why did that happen? Because technology makes things more efficient. And here's what nobody tells you. This is the natural state of a free market. Everything should be getting cheaper over time. Not just technology though, everything. Seriously, think about this. It's way more efficient to cut down trees now than 70 years ago. The materials we use for houses are way better. We have better design, better building processes. Building a house should be way cheaper now than it was in the 1950s. Not 50 times more expensive in dollar terms. The only reason prices go up is because the money is broken. Quick clarification, Bitcoin isn't what makes things cheaper. Bitcoin is neutral, fixed supply, 21 million, that no one controls. It's the free market that makes things cheaper when money can't be printed. Because the natural state of the free market is deflation. But until I understood this next part about competition, I honestly did not believe this. Here's what most people miss about free markets. When someone sees a business succeeding, they think I can do that better for cheaper. So they compete. Not a race to the bottom through cutting corners though. That's the rigged game with bailouts and subsidies. This is continuous improvement through genuine competition. Jeff Booth calls this,
It's 8 billion people in service of 8 billion people.
Think about that. We've never lived in a world where everyone serves everyone else and prices fall forever. Until now. This is the first time in history it's possible because the money can't be controlled or printed by anyone. Right, so far deflation is natural, competition drives prices down, but broken money breaks this system. So with Bitcoin, what does this actually mean for your life? Let me show you with my own story. I was a PE teacher for 10 years, about £32,000 a year, teaching kids who didn't really want to be there, filling out paperwork nobody really read, no way out. Then I took a £700 SEO course from a Facebook ad. I used it to rank a home gym website on Google, and within 2 years of doing this part-time on the side, I was making more from affiliate commissions than from teaching. Here's what broke my brain. I spent £30,000 on university over 4 years, but a £700 course that I did in a couple of weeks changed my life. Not because university is useless, because the gatekeepers of information are dying. Sal Khan said,
If Isaac Newton had done YouTube videos on calculus, I wouldn't have to.
One genius creates the perfect video. Millions learn for free forever. And people are already living this. Rob and Sylvia in Madeira built a learning community where kids direct their own education. I'll show you their full story in a moment because it proves this isn't just theory. In a free market with neutral money, savings actually work. By 21, you could start with some savings instead of £50,000 in debt. Capital to launch a business or invest in real skills, not debt forcing you into jobs that you hate just to pay it off. The technology exists. Khan Academy is free already. YouTube has millions of hours of expert teaching. The only thing blocking this is a system that profits from keeping you in debt for credentials you don't need. Rigged game, gatekeepers extract value. Free game, knowledge flows freely and you keep the value. You see the trap? The system doesn't just take your money, it's taking your time. So here's the question everyone asks. That sounds great, Mike, but I don't have time to homeschool. I can barely exercise, let alone educate my kids. Plus, I have to work overtime just to put food on the table. Fair point. So what does this actually look like in a global free market? Let me show you with Rob and Sylvia. They moved to Madeira where they could live in a Bitcoin circular economy. Here's what changed for them. They earn in Bitcoin, they spend in Bitcoin. When money can't be inflated, the free market actually works. Everything gets cheaper every year. Check this chart out. It shows what happens when you price things in Bitcoin instead of dollars. Not hypothetically, actually. And this is their reality that they have been living. Food, rent, cars, all falling in Bitcoin terms. And because their purchasing power increases every year, one of them doesn't need to work anymore. They have time to homeschool their kids. At 4 years old, one daughter spoke 3 languages fluently and could read some Thai.
So for example, she's 4 years old now. She speaks fluently, she speaks 3 languages. So she speaks Spanish, English, and Greek. She can read a little bit of Thai because we spent a few months in Thailand.
Not because she's a prodigy, because when kids learn what they're actually curious about, this is what happens. And they're not just homeschooling their own kids. They're teaching other children in the community, building a learning community where kids direct their own education. This is what time abundance looks like. Not because they got rich, because their money works for them instead of melting away.
Future Mike here, and I've just got back from BitFest in Manchester, and I was just speaking to another mum about this vision. Funny enough, we're both former teachers, and first thing she said, but I don't want my kids home all day, and also I'm not really equipped to teach them everything. And she's right, but we're not supposed to be. When people have time, the free market will respond. Daytime reading groups, math tutors, science workshops, dance classes, all competing to serve you. You're not just going to be replacing school with DIY chaos. You're going to be choosing from abundance.
You see the pattern? In the rigged game, you work to survive. In the free game, you work to live.
And also, we all tend to underestimate our kids' natural ability and willingness to learn, and also underestimate our own ability to facilitate their learning.
And when you have time, something else changes. Food. I actually spoke with Rob and Sylvia at Manchester BitFest just today, and I asked them, what's actually different now that you're living on Bitcoin? They said, we're growing food again, real food. You know, they have time to cook and share meals with neighbours, and time to build a community. Just think about that. In the rigged system, government subsidies make processed garbage cheaper than real food. Corn syrup, seed oils, factory meats, all subsidised. But in a Bitcoin circular community, real food becomes affordable again. Local farmers can compete, and you have the time to actually enjoy it or do it yourself. And this is what time abundance creates. Not just freedom from work, freedom to live. In the rigged game, you eat alone from the microwave. In a free game, you feast together at a table. You see the pattern? More time, better food, stronger community, all because money works.
And here's where it gets really interesting. In a deflationary economy where prices fall every year, something unexpected happens. Government becomes less important. Not because we're eliminating it, because fewer people need it. When your purchasing power doubles every decade, you don't need food stamps. When education is free online, you don't need student loans. When housing becomes affordable, you don't need housing benefits. Welfare exists today because the money is broken. Fix the money and most people don't need welfare. Dominic Frisby has a book on this called The End of the State. And this isn't done through force, but it's just done slowly over time by them not being needed. But here's the question everyone asks. What about healthcare? What about the NHS or about Medicare? Won't people just be dying in the streets because they can't afford to be treated? This is where it gets really interesting. When employers in California made patients price conscious for hip replacements, prices dropped 37% almost overnight. Why? Because patients could finally see the price and went where it was cheaper, forcing everyone to compete. There's a doctor in Florida, Dr. Lee Gross. He kicked out insurance companies and posted every price online. Under $100 a month for unlimited visits, less than your phone bill. No hidden costs, no surprise bills. And then someone asked him, what if a doctor opens next door and charges $40 a month? He said,
we're onto something because that question has never been asked in the American healthcare system ever.
Remember what I said about competition making everything cheaper? Listen to this.
So that doctor and I are going to have to compete on price and quality. And I'm going to have to justify why my price is twice as much. Maybe I provide better service, maybe I'm just better trained, have better credentials, have more experience, but something tangible is going to have to justify that, or I'm going to have to lower my prices and to compete, or I'm going to lose patients to the person down the street.
That is exactly what a free market looks like. Want a doctor who knows your medical history, who does home visits? You can have that for $100 a month. Want just urgent care with no frills? That's $40 a month. Competition means you get to choose what matters to you. Healthcare gets better and cheaper every year. Rigged game, middlemen, insurance companies, hide prices. Free game, transparent prices create value. Now hold on, because what I'm about to show you sounds impossible, but it's actually happening in San Francisco right now. Your car sitting in your driveway, in 5 years, it could be earning you £200 a month while you sleep. Sounds insane, right? Let me show you how. In San Francisco, right now, self-driving cars are operating 24/7. You can hire one using the Waymo app from your phone. Combine this with Bitcoin payments and here's what you get. Your car drives around earning money for you while you sleep. You hire one for pennies compared to today's taxi costs. In 2024, these cars drove 7 million miles with fewer accidents than human drivers. And that technology is the worst it's ever going to be. It's only going to get better. Think about what this means. Every hour commuting returned to you. Every delivery driver working 60-hour weeks gets their life back. The technology exists right now. The only thing stopping it? Regulations protecting taxi monopolies. Now, I know what you're thinking, but Mike, if AI takes all the jobs, how do people survive? Now hold that thought, because Jeff Booth is going to answer that perfectly in a minute. But first, here's what people miss. In a deflationary economy, you need less income. If prices fall 30% in 5 years, losing your job might mean freedom. Your car earning £200 monthly isn't taking someone's job. It's giving you options you never had. Technology doesn't destroy opportunity. It redistributes time. Every taxi driver freed up can do something else. Every delivery driver gets their time back. And in a deflationary economy where prices fall, you need less income to maintain your lifestyle. Technology doesn't destroy opportunity. It creates abundance. Rigged game, technology feared, jobs protected by force. Free game, technology embraced, humans freed to do what they love. Remember, I will show you the one thing that could break Bitcoin from becoming the first global free market. But this next part changes everything. Did you know there are 16 million empty homes in America? Housing affordability is at crisis levels. When money melts at 7% per year, people use houses as savings. They have to become landlords just to preserve their wealth. Bitcoin fixes this, because Bitcoin gives people an actual sound place to store value. They wouldn't need to learn a second job to preserve their wealth from their main job. Housing goes back to being utility value, a fraction of the current cost. Building becomes more efficient. The cost reflects actual resources and labor, not the speculative premium. A house becomes what it actually is again: shelter, not a store of value. Now, I know what you're thinking, Mike, this sounds like fantasy. Fair, so let me show you the proof that it's already happening. Bhutan, 40% of GDP in Bitcoin. Electrification in Africa. In rural Kenya, they generate 530 kilowatts, 200 go to the village, 330 to Bitcoin mining, which makes it profitable in the first place. Without Bitcoin, electricity would never reach that village. Rob and Sylvia in Madeira, living on a Bitcoin circular economy. Everything gets cheaper every year, homeschooling their kids and others in the community. See the scale? Nation states, communities, families. It's already happening. Yeah, but people losing their jobs is bad, right? Danny Knowles asks Jeff Booth the question everyone's thinking.
But if people lose their job to AI, they're still going to need to buy groceries, which even if the prices fall, there is still a price to those groceries. So how does that work?
So if you're in Bitcoin, you already see it, right? If you were in Bitcoin 4 years ago or 8 years ago, and you just bought $100 a week, you never have to worry about groceries or anything else again right now.
Don't believe him? Here's the math. $100 per week for the last 8 years gets you 2.9 Bitcoin. Living off $5,000 a month today, you'd only spend 2.7 Bitcoin over the next century. You'd never run out. Not because Bitcoin made you rich, because your purchasing power grew while prices fell. In a deflationary economy, you're not on a treadmill trying not to fall off. Today, you need a second income just to maintain your lifestyle. Overtime, side hustles, all to keep up with inflation. In a free market, you improve to serve people better, not to survive. But won't monopolies form anyway? Monopolies exist today because governments protect them. Monopolies pay the politicians who create subsidies and rules to squeeze the little guys. In an open protocol like Bitcoin, there's no mechanism to block competition. All right, but this really does sound too utopian. It does, but remember, this wasn't possible before 2008. Bitcoin is the enabling technology here. Decentralized, open protocol bounded by energy that's secure. Maybe hyper-Bitcoinization happens in 10 years, maybe 50, maybe 100. But here's the thing, it happens for you personally, whenever you choose. The door is open, you can walk through it anytime. Most people ask, will I get rich? The right question is, will I be free? As long as Bitcoin stays decentralized and secure, this is where we're all moving. And you can't be late to a free market. There are no barriers to entry. You just choose to step in. So that's what a free market creates. Time abundance, real food, kids learning the things that they love. Healthcare that gets cheaper every year. This is exactly why I started this channel. Not to sell you Bitcoin, but to prove what's actually possible. Because this is much bigger than you and me getting rich. A free market will change things for your kids, your parents, your arch nemesis, everyone. So here's the question to ask yourself. If money is decentralized, open, a protocol, energy bound, and secure, how can that not be a free market? Seriously, if you can see a way, please let me know. So the question isn't what would a free market look like? You just saw it. The question is, does Bitcoin actually have these 5 properties? Let's attack each one together and test it from every angle possible. So by the end, you'll know whether this world is inevitable or just a nice dream. But after I did this, I realized everything depends on one thing. Bitcoin must stay decentralized. That's the real threat. So let's start there. Most people think Bitcoin is decentralized because Satoshi disappeared. They're wrong. Bitcoin has 4 pillars of decentralization, and right now, 3 companies hold $300 billion worth, with 2 pillars completely broken. And these are the 2 that protect you. These people think they own Bitcoin. They just own permission, and they don't even realize what they've surrendered. Here's which protections you've lost, why custodians want it that way, and what you can do about it today. But first, why did Satoshi have to disappear for any of this to work? In 2011, Bitcoin's creator Satoshi Nakamoto disappeared. No goodbye, no explanation, no forwarding address. Most people think this was random. It wasn't. This was the design. This is what makes Bitcoin different from everything tried before it, and most of what's come since. Ethereum has Vitalik Buterin, Cardano has Charles Hoskinson, Solana has a foundation running things. Bitcoin has nobody. Satoshi's Bitcoin wallet, the one that's linked with mining the first blocks, has over $100 billion worth of Bitcoin sitting in it right now. $100 billion. And it hasn't moved, not once in 16 years. That's the level of commitment to decentralization we're talking about. Without Satoshi around, no one can change Bitcoin's direction. No government can pressure a CEO. No corporation can buy out the founder. No lawyer can serve papers on anyone. That's the foundation of Bitcoin. But it's not really what makes Bitcoin decentralized. There are 4 specific types of decentralization that build on it, and understanding them will show you exactly what you need to do to actually protect your Bitcoin. The first one gives you something no bank ever could: proof. When you bought Bitcoin on Coinbase, did you actually verify that they have it? Did you check the blockchain yourself? No, you just trusted them. That's the problem with not running a node. A node validates every single transaction and every single block independently. Think of it as Bitcoin's immune system. There are over 100,000 of these running all over the world right now. Anyone can run one. TC, the guy who I also do a podcast with, and also he's from the Road to 1 Bitcoin, proved you can run a Bitcoin node on a Raspberry Pi for about £150, including the hard drive. But something happened to me personally that drove this home. I held Bitcoin on Coinbase for years. I thought I was being smart, it's insured, it's regulated, it's safe. Then one day I tried to withdraw it to my own wallet. Your account has been flagged for review. How long do you think it took me to access my Bitcoin? 30 days. I couldn't access my own money. I had to fill out forms, submit documents, wait for some compliance person to decide if I was allowed to have my own Bitcoin. That's when it hit me. I didn't own Bitcoin, I owned permission to access Bitcoin. Huge difference. When you hold Bitcoin on an exchange or in an ETF, you're not running a node because there's no point. You're trusting someone else to validate for you. You're trusting that they're actually holding the Bitcoin they say they are. And that trust, that's the exact thing that Bitcoin was designed to eliminate. I finally got my node running properly recently, and I'll show you how I did this soon. So that's the first type, node decentralization. But the second type is what saved Bitcoin when the world's biggest economy tried to kill it overnight. In 2021, China banned Bitcoin mining. Everyone panicked. China controls most of the Bitcoin's hash rate. This is the end. I actually remember seeing this price action live and thinking there is no way Bitcoin recovers from this. Within 6 months, the mining had redistributed across dozens of countries. Bitcoin didn't even blink. That's mining decentralization in action. Bitcoin's governance system holds an election every 10 minutes. That election decides which version of the blockchain is the valid one. And right now, Bitcoin's mining is spread across multiple continents. After that China ban, the hash rate scattered to the US, to Kazakhstan, to Canada, to countries all over the world. Now, there is some concentration risk here. 5 pools make up over 90% of the hash rate. Large mining pools could theoretically combine to attack the network by controlling over 51%. But here's what they don't. If you cheat Bitcoin, you only cheat yourself. The economic incentives are so perfectly aligned that attacking the network costs you more than just playing fair. If they did double spend their Bitcoin, the price tanks and all their mining equipment becomes worthless. That is mining decentralization. It keeps the election fair every 10 minutes. But the third type is why Bitcoin moves so slowly and why that's actually its greatest strength. When Ethereum wants to make a change, the Ethereum Foundation coordinates it and the community follows. When Solana's network goes down, the foundation reboots it. When Bitcoin had the scaling debate for 3 years, people thought it was broken. But here's what actually happened. Bitcoin has multiple client implementations running the same protocol, like different browsers all reading the same websites. Multiple teams, multiple code bases, no single point of failure. And to change the rules, you need overwhelming agreement from everyone. Miners, nodes, developers, businesses. Usually 90 to 95% consensus or nothing changes. Now, some people look at this and say Bitcoin is too slow to innovate. But during those 3 years, people called failure, frustration bred innovation. While everyone argued, developers built the Lightning Network, a way to process millions of transactions without bloating the blockchain and doing it almost at the speed of light for basically free. The failure to quickly agree actually proved Bitcoin's strength. No dictator could force a bad decision. Think of it like this. Ethereum is like a sports car where this can happen. Bitcoin is a massive ship with 100,000 captains who all have to agree on the direction. It moves slower, but good luck hijacking that. That's development decentralization. But the fourth type is the most misunderstood, and it's the one most people think they have, but don't. Bitcoin whales control everything. I see this headline almost every other week. Here's why that's wrong. Having more Bitcoin doesn't give you any more control of the network. Let me say that again. Owning more Bitcoin gives you no more control. Bitcoin isn't like traditional stocks where more shares equal more votes. Your balance gives you zero protocol control. In mining, votes come from computing power, not from Bitcoin balance. In node operation, same thing. One node equals full validation power. A whale with 10,000 Bitcoin has exactly the same ability to change Bitcoin's rules as someone with 0.0001 Bitcoin, which is to say, none. But here's the critical part most people miss. If you don't control your keys, you don't have Bitcoin. You have an IOU. When your Bitcoin sits on an exchange or in an ETF, the custodian holds the power, not you. And when billions of dollars worth of Bitcoin gets concentrated in a few custodians' hands, that breaks wealth decentralization. I also break down whale concentration myths in another video, link below. Which brings me to the threat that most people don't even see. So now you understand all 4 types of decentralization, here's the problem. 3 companies custody most of their Bitcoin in ETFs and exchanges: Coinbase, Binance, and Fidelity. If a government wanted to seize that Bitcoin, they wouldn't need to attack 100,000 nodes spread across 100 countries. They just need to knock on 3 doors. And the custodians, they profit from this. Every Bitcoin in their vault generates custody fees, lending revenue, and regulatory approval. Self-custody eliminates all of that. They need you dependent on them. It is their entire business model. Billions of dollars in Bitcoin sitting in centralized vaults. People thinking they're getting exposure to Bitcoin, but they're not running nodes. They're not controlling the keys. Custodians are. Look, I get it. It's convenient, it's easy, it's regulated, it's tax efficient, but it completely breaks the decentralization model. So here's what's actually happening if you hold Bitcoin through an ETF or exchange. Mining decentralization still works. Development decentralization still works. Node decentralization is broken. You're not validating anything. And wealth decentralization is broken. Custodians control it all. So you're only getting 2 out of the 4 decentralization pillars. But here's why that is catastrophic. The 2 that break are the only 2 that protect you. Mining and development protect the network. Nodes and custody protect your Bitcoin. Lose those 2 and you're just back to trusting banks. So what do we actually need to do? Start with self-custody. Get a hardware wallet to control your own keys, non-negotiable. Then run a node and validate transactions yourself if you can. Look, I'm not great with this techie stuff and I kept putting this off for ages. I had a ledger with security issues, downloaded node software, but I never actually used it, never moved Bitcoin through it. It just sat there because I didn't really understand what I was doing. Then I jumped on a free 30-minute call with the Bitcoin Way, and that call changed everything. They walked me through what hardware I needed, how to set it up, and why each step mattered. One-on-one, no pressure. Now, I can move my Bitcoin without anyone's permission and verify the blockchain myself. Nobody can freeze my account or make me wait 30 days or even longer. This is a skill I'll carry with me for the rest of my life. And it was worth figuring out properly the first time instead of risking generational wealth on guesswork. I went with the Start 9 node, 5% discount in the link below. Plus you can get a free 30-minute call with the Bitcoin Way in the link in the description if you need help too. Bitcoin's decentralization isn't just a feature, it's the foundation of everything else. And now you know how to protect it. Jeff Booth says this repeatedly. As long as Bitcoin stays decentralized and secure, it will reprice the entire system. Let me know if you've already done this and how you did it, because here's what happens to everyone else. They keep their Bitcoin on Coinbase, keep buying the ETF, keep trusting custodians. Then one day they try to withdraw it and see your account is under review. And next time, it may not only be 30 days until you can get it back. Don't let that be you. So now you understand Bitcoin's decentralization, but that raises an even bigger question. If Bitcoin is completely open source, if any hacker on earth can read every line of code right now, why hasn't it been hacked in 16 years? Better yet, why have thousands of attempts to copy Bitcoin all failed? To see why, you need to watch this video next. Because being open isn't Bitcoin's weakness, it's its superpower. Bitcoin's code is open. Any hacker in the world can see it right now. So here's the obvious question. Why hasn't anyone hacked Bitcoin in 16 years? It's not because they haven't tried. It's because it's unhackable. There are 4 layers of Bitcoin's openness, and when you understand all 4, you'll see why being open source isn't just safe, it's the only reason you can trust it at all. You'll also finally understand why every attempt to copy Bitcoin has failed. But first, let me tell you why this felt so wrong to me for so long. Here's what confused me for years. Bitcoin requires you to keep your private keys secret, but the entire system protecting those keys is completely public. That sounds backwards, right? We're taught that security comes from secrecy. Banks hide their code, payment processors hide everything, but Bitcoin proves something counterintuitive. You can have a system where everyone sees exactly how it works, and that makes it more secure, not less. Your keys are secret, but the system is open. That is the genius. Here's the expensive lesson that taught me this. 2017, a Bitcoin investment site promised 15% monthly returns. Slick website, verified testimonials. I even spoke to a few people on Zoom who told me how it had been working out for them. Then I asked the company, how does this actually work? Ooh, that's proprietary. Just have to trust us. I mean, it really should have clicked then, shouldn't it? Real Bitcoin is open and verifiable. Scams are closed. Trust me, bro. I lost $1,000 to learn that lesson. Now let me ask you this. Can you audit the Federal Reserve? Can you verify how much money they printed last week? No, you're just told to trust them. And this brings us to what Jeff Booth calls
money is subordinate to law.
Meaning whoever controls the money can eventually control everything else, even constitutions. Here's the crazy part. In 2017, Equifax, the company that decides if you're trustworthy enough to get a loan, got hacked. 143 million people's data was stolen. Why? Their code was secret, so nobody could tell them their security was being broken until it was too late. Bitcoin's code, public for 16 years. So how does making everything public actually make it more secure? Let me show you the 4 layers that make Bitcoin unhackable, and each layer reinforces the others. Bitcoin's code is completely public. Every hacker, every government, every security researcher can see it right now, and that's why it's secure. There's this principle called Linus's law. Given enough eyeballs, all bugs are shallow. And here's the paradox. The most secure software in the world is open source. Linux runs 96% of web servers. 1,000 plus developers check Bitcoin daily. Yet it has a $2 trillion bounty on it. So why hasn't anyone tried to hack it? They have. The only successful attack on Bitcoin, 2010. When Bitcoin was just 18 months old, someone created 184 billion Bitcoin through a bug, fixed in 5 hours. In 2013, a database bug caused a brief chain split. It wasn't a hack, just a software issue, resolved the same day. Since then, over 12 years and 0 successful protocol attacks. Every theft has targeted centralized services, not Bitcoin itself. Closed source isn't more secure, it's just more secretive. When Equifax got hacked, we didn't even know there was a problem for months because everything was hidden. With Bitcoin, if there's a vulnerability, thousands of researchers are already working on the fix before it becomes a problem. So open code prevents bugs, but if only the right people could use it, it's just another gatekeeping system. Layer 2 removes all gates. Bitcoin doesn't just have open code, it has open access. Bitcoin doesn't care about your identity, your credit score, your nationality, or your politics. Charles Gilmet, I absolutely butchered his name. From Ledger, the hardware wallet company, explains it this way.
Bitcoin is a big revolution because it's permissionless money. For me, this is the core value proposition for Bitcoin.
Anyone can use it, build on it, run a node, or mine Bitcoin. No applications, no approvals, no gatekeepers.
This permissionlessness, let's say, is made possible thanks to 2 pillars. On one side, you have the decentralized consensus. No one can prevent you to make a transaction as long as it's compatible with the protocol, with the consensus. And the second pillar is self-custody, and you are the only one able to make a transaction, and you are the owner.
And here's why this matters. Throughout history, whoever controlled the money controlled everything. Armies, surveillance, propaganda. With Bitcoin, the money can't be printed or seized. As Jeff Booth says,
there can be no dictator with Bitcoin. The money that should flow to you naturally is right now taken from you.
Right, through money printing.
Through money printing. And it goes to dictators. It goes to those in control. It goes to, and you are part of that system that make it stronger and stronger, thinking it's somebody else. It's you.
Yeah.
And the more time you're in Bitcoin, the more you realize you can completely defund that. If they knew you have an open protocol that they can just move their time anywhere in the world. First global free market that ever existed, and their time can't be taken anymore.
So anyone can use Bitcoin, but how do you know no one's cheating? Layer 3 gives you something no bank ever could. Proof. Every Bitcoin transaction since January 2009, when it was created, is completely public. Every single one, forever. You can verify Bitcoin supply yourself, run a node, check the transaction history. confirm that about 20 million Bitcoin currently exist, confirm that the issuance schedule is exact, confirm that no one can print more. Jeff Booth describes running a node this way.
I'm part of a network that audits this 10 minutes and nobody can cheat.
Think about that. You personally can verify that no one, not banks, not governments, not anyone, can cheat the system.
If money's always been cheated over time, and that's bounded by energy, that as long as it stayed like that, that truth or that ledger of truth would reprice all of the broken money because it would be the free market, and that would gain more trust over time.
Compare that to the dollar. The Fed audits itself. They stopped reporting how many dollars exist in 2006. You just have to trust them, bro. Bitcoin gives you radical accountability. No hidden inflation, no backroom deals. That is, of course, if you store your Bitcoin yourself. All right, 3 layers: open code, open access, open ledger. Most people think that's it. But there's one more layer that makes Bitcoin literally impossible to kill, even by governments. Bitcoin has no CEO, no board, no Bitcoin Inc. The founder, Satoshi Nakamoto, has disappeared. So how does Bitcoin adapt and improve? Changes are proposed via BIPs, Bitcoin Improvement Proposals. Anyone can submit one. Anyone. The community debates, adopts or rejects them based on merit, not credentials. It doesn't matter if you're Satoshi or a teenager in your bedroom. The best ideas win. Contrast that with the Fed. 12 people behind closed doors making decisions for the entire dollar system. There are multiple Bitcoin implementations you can use to run a node. For example, Bitcoin Core and NOTs, all following the same consensus rules. No single point of failure. In 2017, corporate interests tried to take control. The community rejected it. Bitcoin Cash forked off. Users decided, not companies. Why does this matter? Closed development means whoever controls the code controls the system. Open development means no one controls the system. And that's exactly the point. There's no one to be coerced or bribed, no single point of failure. But I know what you're thinking. If Bitcoin is open source, can't anyone just copy it? Yes, and thousands have tried. Let me show you what happens when you try. Let's say it's 2015, you had $100,000 to invest. Option A, copy Bitcoin's code, launch Bettercoin with all the improvements. Cost about $50,000 to pay a developer to get it up and running. Today's value, maybe $10,000. You lose $90,000. Option B, just buy Bitcoin. $100,000 in 2015 bought you around 450 Bitcoin. Today, that's worth $50 million. Bitcoin Cash tried to replace Bitcoin in 2017. Today, it's worth 1% of Bitcoin. Bitcoin SV, Bitcoin Gold, hundreds of forks, all dead or dying. Because they copied the code, but nothing can copy 16 years of trust. Code is free, trust takes time. It's why Jeff Booth says,
if you cheat Bitcoin, you only cheat yourself.
And here's the kicker. Because Bitcoin is open source, you can verify all of this yourself. Want to verify the 21 million cap? Run a node. Want to see if it's been hacked? Check the blockchain. Want to know if developers are honest? Watch the GitHub commits. Cost around $500 for hardware, or free if you've got an old computer and hard drive lying around. Compare that to auditing your bank. Impossible. Verifying the Fed. Illegal. Or checking if your stocks are real. Good luck. Bitcoin is the first financial system where you can be the auditor. That is, of course, if you store your Bitcoin yourself. An ETF, that's paper Bitcoin. You can't verify it. You're trusting intermediaries. Real ownership means self-custody. And that's the real superpower of open source. You can verify for yourself that it can't be hacked. Look, I'll be honest, I put off running a node for years. I will do it one day. Sound familiar? I was also using a closed sourced hardware wallet. So if Ledger goes out of business tomorrow, I'd be stuck. With open source, I own the keys and the code. I finally set up my own node last month and sorted out my self-custody. Now I can verify Bitcoin supply myself, validate every transaction, send or receive money without trusting anyone or any device. And I won't lie, there is a bit of a learning curve here, and I'm not a tech wizard, so I booked a free call with the Bitcoin Way. They walked me through exactly what to get and how to set everything up one-on-one. I went with the Start 9 node, 5% discount in the link below. It's the best decision I made. Total self-sovereignty, no banks, no intermediaries, no black boxes, just me and the network. And honestly, I sleep way better now. Free consultation in the description if you want help too. So let's come back to the question we started with. Bitcoin's code is open. Why hasn't anyone hacked it in 16 years? Now, you know the answer isn't just one thing, it's 4 layers working together. Layer 1, thousands of eyes fix the bugs. Layer 2, no permission needed to use it. Layer 3, you can verify everything yourself. Layer 4, no one controls it. But here's what really matters. History shows that centralized systems, no matter how well designed, eventually face existential threats. eGold was shut down, Mt. Gox was hacked, banks have been robbed and seized. Centralization creates a target, and Bitcoin flipped the script. Instead of security through obscurity, it's security through transparency. Instead of trust us, it's verify yourself. Instead of hoping hackers can't find the vulnerability, it assumes they can and removes the vulnerability entirely. That's not just a better system, it's a completely different paradigm. Jeff Booth said something that captures this perfectly.
It imposes a discipline that forces the free market for the first time in human history, that we'd have a global free market. And that's a big deal.
Yeah.
Think about that. For 5,000 years, money has been controlled by kings, banks, and governments. They printed it, they seized it, they decided who could use it. Bitcoin is the first money in human history that can't be controlled. Not because someone's protecting it, because the system itself makes control impossible. That's not a vulnerability. That is the point. So Bitcoin can't be hacked, but what's stopping another cryptocurrency from doing exactly the same thing? And isn't it just a total waste of time if Bitcoin's just going to destroy the planet with its ridiculous energy use? Well, here's what no one tells you. Bitcoin's energy use is bringing electricity to people who've never had it before. It's also connecting a digital thing with the physical real world. And the crazy part, these people have no idea that Bitcoin exists. That's not waste. That is a feature. Watch this next to see how this is possible. Oh, and you'll also see how it's solving the one problem that's been killing solar and wind projects for decades. You want to destroy Bitcoin. You'd need $20 billion in hardware, then $300 million per week in electricity costs, and you'd get maybe a few hours of chaos before your money becomes worthless. Welcome to the most expensive suicide mission in history. And this is why Bitcoin's energy use isn't the bug, it's the entire point. But here's what's really crazy. The same energy mechanism that makes Bitcoin impossible to attack is also solving one of the biggest problems in renewable energy, while cleaning up the environment. And wait until you see how it's helping people who don't even know what Bitcoin is. I know this sounds crazy, but I've actually got the receipts. Let me show you. We've been programmed to think that energy use equals waste. But what if I told you that's backwards? What if the energy use is the entire point? Before Bitcoin, every attempt at creating digital money failed for one simple reason. You can copy digital files infinitely. How do you stop someone from spending their same digital dollar twice? Every solution before Bitcoin required trust. DigiCash, trusted company, went bankrupt. eGold, trusted company, shut down by the government. Bank transfers, trusted intermediaries. Satoshi's breakthrough wasn't inventing digital money. It was solving trust. And here's the key insight. You can't fake scarcity in the digital world with code alone. You need to anchor it to the physical world. Enter proof of work. The genius is brilliantly simple. You turn electricity into security. Here's how it works. Miners race to win a lottery that requires trillions of tickets. Guesses. Guessing equals burning electricity. The winner gets Bitcoin. Everyone else verifies the work in milliseconds. And here's what most people miss. The energy isn't wasted. It's converted into security. Every kilowatt hour spent mining makes Bitcoin harder to attack. But it gets even more interesting than that, because what I discovered is that Bitcoin mining isn't just one thing. It's like a Swiss Army knife. And wait until you see all the different problems this one tool can solve. And here's the beautiful part, Bitcoin automatically adjusts. Every 2 weeks, every 2016 blocks to be exact, Bitcoin recalibrates the mining difficulty. More miners join, the lottery gets harder. Miners leave, the lottery gets easier. Think of it like a thermostat for security. Too hot, it cools down. Too cold, it heats up. Always finding equilibrium. Result, consistent 10-minute blocks forever, no matter what. Which brings us back to that $20 billion attack and why it's actually impossible. Let me break down what that attack would actually look like, because the math here is wild. To successfully attack Bitcoin, you'd need to control 51% of the network hash rate. That's about 500 exahashes per second. To match 500 exahashes, you'd need 3.5 trillion gaming laptops running simultaneously. That's roughly 400 laptops for every single person on Earth. The hardware cost alone is $15 to $20 billion minimum, with a massive discount. But here's where it gets insane. The electricity costs to run that attack, $300 million per week. So what would you actually get for all that money and power? The ability to double spend your own coins, maybe for a few hours before the entire network detects what's happening. Then Bitcoin's price crashes. Your stolen coins become worthless. Your $20 billion in hardware becomes worthless. It's like buying a $20 billion flamethrower to rob a lemonade stand and then burning down the lemonade stand with your own money still inside. Game theory makes attacks economically suicidal. But here's the part that really blew my mind. Now, you might be thinking, but couldn't a state actor just secretly buy all this equipment and then turn it on at once? No, and here's why. To get the hardware, you need 2 to 3 years of global ASIC production. That's not something you can just hide. Supply chains talk, competitors notice. Bitcoiners on Nostr will figure this out. And even if you somehow kept it a secret, the moment you turn on 10 gigawatts of mining equipment, that's 10 nuclear reactors worth of power. The entire network sees it instantly. Bitcoin's hash rate is public. Everyone would watch you approach 51% in real time. Exchanges would prepare, developers would write fork code, the community would be ready. By the time you flip the switch, the trap is already set. You'd spend 3 years and $20 billion building an army that announces itself the moment it shows up. And the community has 3 years to prepare the fork that makes your army obsolete. This is why no state actor has even tried. It's not just that the attack costs too much, it's that you can't hide it, and by the time you're ready, so is everyone else. It's like spending billions to control a bridge only to watch everyone build a new bridge and abandon yours. Now, stay with me here because this is where it all clicks together. The same mechanism that makes Bitcoin so hard to attack, it's solving an energy problem as old as electricity itself. But before I show you how, you need to understand something about electricity that changes everything. And nobody tells you this. Electricity is use it or lose it. Can't store it easily, can't transport it cheaply. It's simultaneously expensive during a Texas winter storm and then free when there's too much solar. As Troy Cross said,
and it is radically scarce and radically abundant at different places and times.
And here's a number that's going to blow your mind. In West Texas alone,
10% or 15% of all the solar this year was curtailed, right? Just because you couldn't put it out into the grid, there was nowhere for it to go, so it's just
thrown away. Literally thrown away by the grid because there was nowhere for it to go and no one to use it. And storing too much in batteries is dangerous. Picture this, a solar farm in the middle of nowhere, West Texas. Peak sun, panels generating massive power, and nowhere to send it. The power lines aren't built yet. Before Bitcoin, that energy just evaporated, wasted. Now, it mines Bitcoin, and that Bitcoin revenue helps to fund the infrastructure to eventually connect that solar farm to the grid.
Is the best option to waste it? Or is the best option to put it to some type of use, right? And to kind of also create this price floor that can be put there.
And here's the beautiful part. The home is being powered by that solar energy. They don't even know anything about Bitcoin. They don't care about Bitcoin. They just know their electricity works and now their bills went down. Bitcoin is funding renewable energy build out and the people benefiting don't even realize it. That's the Swiss Army knife in action. And that 10 to 15% waste, that's just one example. The same mechanism that makes Bitcoin impossible to attack also captures methane that would burn into the atmosphere, which is 80 times worse than CO2, uses solar energy grids throwaway, monetizes excess hydropower, creates value from stranded energy in remote locations. One mechanism, multiple solutions. Bitcoin creates a price floor, always a buyer, always above zero. Take Kenya, for example. Joe Nakamoto documented a hydro plant in rural Kenya generating 533 kilowatts. The tea factory and local community only needed 200 kilowatts. So what about the other 333? Before Bitcoin mining, that energy went to waste. Now, Bitcoin miners use the excess. This makes the whole project profitable enough that people actually build the infrastructure in the first place. Small businesses can now operate and kids can study after dark. Families can refrigerate medicine. All because Bitcoin mining made the economics work. You can find out more about this and other crazy uses for Bitcoin in the real use case video in the description below. And this same energy mechanism that makes renewable projects profitable is also what makes Bitcoin impossible to attack. But I know what you're thinking. What about the environment? What about all that energy use? Let me show you 3 numbers that destroy that entire narrative. According to a Cambridge study from April 2025, here's what's actually happening. 52.4% of Bitcoin's energy is sustainable energy, and it's rising at a crazy rate. When I first saw that number, I literally went back to check the source 3 times. Because if this is true, and it is, then everything we've been told is backwards. And here's what they won't tell you on the evening news. Here's the breakdown. 42.6% renewables, wind, solar, hydro, plus 9.8% nuclear. 70% of Bitcoin miners are actively engaged in climate mitigation strategies. The trajectory is crystal clear. Bitcoin mining is getting cleaner faster than most traditional industries because miners are hungry for the cheapest energy possible, and that is renewable energy. That's the global free market working at its finest. Now, critics will say, but that's still using energy. And they're right, but they're asking the wrong question here. The question isn't, does it use energy? The question should be, what does that energy do for us? Here's the comparison nobody makes. Bitcoin uses less energy than traditional banking, less than gold mining, and it secures $2 trillion 24/7 globally for everyone without permission. Bitcoin isn't wasteful, it's efficient. Troy Cross nailed this.
We're in a moral panic right now about Bitcoin itself and about mining. And if you just look at the social side, you think Bitcoin is getting hammered in the media and in the popular mind. And if you look at what Bitcoin is actually doing and what Bitcoin mining is actually doing, it's just the opposite. Like, we're starting to see these applications of Bitcoin that are pro-social explode. We're starting to see Bitcoin's power usage get more flexible, and we're starting to see it benefit grids more. These things are radically out of sync.
All the headlines scream, Bitcoin wastes energy, while the reality shows it's getting cleaner, more flexible, and more beneficial for everyone every year. We've seen this pattern before. Nuclear power was going to kill us all. The moral panics always break down when the incentives become clear. And Bitcoin's energy incentives, they align perfectly with the renewable energy transition. Which brings me to the refrain that we all need to understand. When someone says Bitcoin uses too much energy, here's what they're actually saying. Bitcoin is too secure. Bitcoin is too hard to attack. Bitcoin is too decentralized to control. The energy consumption is the entire point. Troy Cross said it best.
Don't waste precious resources where and when they're scarce. Like if you are using tremendous amounts of electricity for recreational activity during the winter storm, you're a dick and you shouldn't do that, right? But if you're doing it when power is abundant on the grid and there's negative pricing, like, good for you.
That's the updated rule that we all need to embrace. Because here's what makes Bitcoin fundamentally different. Without energy cost, there's no security, no trust, no value. It's just another database. All other altcoins. You can fork Bitcoin's code in 5 minutes. Anyone can copy the software. It's happened before many times and it will happen again. But you can't fork the energy that secures it. You can't copy billions of dollars in real world capital, infrastructure and electricity that's been invested into the network. The miners, the nodes, the computers checking it 24/7. That's what makes Bitcoin valuable. The same mechanism that costs $20 billion to attack also uses excess electricity when there's too much and shuts off when there's not enough, helps fund solar and wind farms by buying their excess energy, makes money from energy nobody else wants, and is always willing to buy power, even in the middle of nowhere. That's not a bug. That is literally a superpower. Most people miss that since 2021, Bitcoin's hash rate is increased by a 6x, while the energy consumption only grew by 40%, meaning miners are getting dramatically more efficient at securing the network. As renewable energy gets cleaner, mining naturally migrates toward it because cheapest power wins. The incentives just align perfectly. Critics who don't understand this will stay wrong, and they'll keep being wrong as Bitcoin continues doing exactly what it's designed to do. That $20 billion impossible attack, that's what energy buys you. Energy anchors Bitcoin to the physical reality in a way that no other digital system ever has. Without energy, Bitcoin would be just another altcoin, another database, another project that requires trust. With energy, Bitcoin is the hardest money humanity has ever created, and a tool that makes renewable energy projects actually profitable in the middle of nowhere, turning waste into wealth and speeding up energy abundance for everyone. I recently set up a little home miner to contribute to the network and actually understand how it works. The Bitcoin way helped me figure out what hardware I needed and how to set everything up properly. If you're thinking about mining, running a node, or securing your Bitcoin properly, they offer a free 30-minute call to see if they can help. They'll walk you through what makes sense for your setup. Links below. Look, this is just one pillar of Bitcoin security, the energy pillar. But without understanding the other 3 pillars, you really can't see why Bitcoin is so secure. And here's the thing, most Bitcoiners get one of them dangerously wrong. It's the pillar Jeff Booth and Jack Dorsey say could actually threaten Bitcoin. And it has nothing to do with technology. It has everything to do with something you are probably doing right now. You can see what this is by watching this video, because once you understand this, you'll never think about Bitcoin security the same way. The biggest threat to Bitcoin isn't governments, hackers, or quantum computers. It's you. In the next 15 minutes, I'll prove it. Jeff Booth, author of The Price of Tomorrow, says,
If Bitcoin wasn't a medium of exchange, it would fail as a store of value. Not might fail as a store of value, would fail as a store of value.
Right now, over 3 million Bitcoin, worth over $300 billion, sit in ETFs and on exchanges where people don't control the keys. That's 15% of all Bitcoin that will ever exist. And look at the rate of change in the last 12 months alone. See, Bitcoin security rests on 4 pillars working together. And if you don't understand all 4, you can't see why your behavior might be breaking the whole thing. So what makes Bitcoin secure? Well, think about this. To attack Bitcoin, you'd need to control 51% of all the computing power securing the network. That requires an insane amount of energy. And here's the beautiful part. Even if you somehow got that much energy and computing power, attacking Bitcoin would be economic insanity. Why? Because the attack itself would crash the value of what you're trying to steal. Bitcoin could just fork off, carry on as normal, and everything they did was pointless. As Jeff puts it,
if you cheat Bitcoin, you only cheat yourself.
Energy creates a physical wall around Bitcoin that can't be bypassed. You can't fake it, you can't print more Bitcoin like you can with dollars. But here's what most people miss. Energy only protects attacking Bitcoin. But what if I told you there's a way to capture Bitcoin without attacking it at all? A way that's completely legal, voluntary, and happening right now. But before I show you that, there's more to Bitcoin security than just making attacks expensive and pointless. Right now, there are over 100,000 Bitcoin nodes running all over the world, many behind Tor browsers for privacy. Note, this is from Luke Dash's tool to track nodes, not the usual ones you see like BitNodes or CoinDance, which only tracks public nodes. Every single one of these nodes audits the entire Bitcoin network every 10 minutes. They verify every transaction, they check the entire history of Bitcoin. And here's why this matters. If there was only one node, or even just a few, Bitcoin could be shut down easily. You just need to stop those specific computers. But when there are over 100,000 nodes distributed across every continent, you'd need to unplug them all simultaneously across every country. And because Bitcoin's code is open source, anyone can verify it. There are no hidden backdoors. This is what don't trust, verify really means. You can run your own node and check everything yourself. Anyone can take a block header, run it through SHA-256 and verify the hash is correct themselves. No single point of failure, no way to shut it down. This is the distributed defense, and this works perfectly, as long as Bitcoin is actually moving through these nodes. But what if there was a way to hold Bitcoin where these nodes become irrelevant, where the verification doesn't matter because the Bitcoin never moves? Now, I know what you're thinking, Mike, this all sounds pretty secure, so why are you saying I'm the threat? Hold that thought, because this next part changes everything. Studies show that while most people can be tempted to cheat under certain circumstances, there's always a minority, call them the unbribable, who won't compromise their principles regardless of incentives. Think Gandhi, Martin Luther King, and JF Kennedy. Let me say that again. No matter what you offer them, no matter what incentive you give them, their internal sense of who they are won't let them cheat. But here's why that small percentage matters so much for Bitcoin. Those are the people running nodes. Those are the people protecting the network. And they're unbribable.
Why do I believe it'll stay decentralized and secure? Because there's too many people today that know its importance. You being one of them. Gigi being one of them. Lynn Alden, Preston Pish, Matt Odell, name all of these incredible minds, and constantly vigilant against the attacks.
These people are constantly looking for attack vectors. They're vigilantly looking for risks and rectifying them. Throughout history, these honest people could be killed or silenced by the dishonest majority. But now, they can't be silenced. They're distributed globally behind Tor browsers. The honest finally have a way to hide from the dishonest. And for the first time in history, they can't be stopped. They're everywhere, protecting this network 24/7. This is the human firewall protecting Bitcoin. And the people who really built Bitcoin, the cyberpunks, they fit this profile perfectly. These people can spot technical attacks, code vulnerabilities, and protocol changes that could compromise Bitcoin. But there's one type of capture they can't stop, because it's completely legal, voluntary, and most Bitcoiners are doing it right now. So we have three perfect layers of security: energy, nodes, and the unbribable. Bitcoin should be unstoppable, right? But there's a fourth pillar, and without it, the other three collapse. That fourth pillar, it's Jeff Booth's most controversial statement.
One of the risks, one of the very real risks, is if it wasn't used as a currency, it will fail as a store of value.
And Jack Dorsey, founder of Twitter, doubles down on this.
I think it fails through irrelevance. I think if it doesn't transition to payments and find that everyday use case, it just gets increasingly irrelevant.
I know that sounds insane. Everyone says just hodl and your Bitcoin will be worth more forever. But what if using Bitcoin as money is actually the most important pillar to keeping Bitcoin secure? Here's the thing. We've already seen this exact scenario play out in history with gold. Let me show you how. Gold failed as a store of value. Why? Because it stopped being used as money. And here's how it happened. Throughout the 1800s and early 1900s, gold coins circulated for large transactions, buying property and major business deals. Silver was used for daily transactions. Britain, the economic powerhouse at the time, had adopted the gold standard in 1821. Around 1870 to 1900, most countries followed, adopting paper currency backed by gold reserves. Why? Paper was practical for transactions, but gold backing constrained how much governments could print, at least in theory. At first, you could actually redeem these notes for gold. Walk into any bank, hand over the paper, and get gold coins. Then one day you couldn't. Sound familiar? In 1914, Britain and most European nations suspended gold convertibility during World War I. In 1933, Executive Order 6102 made it illegal for US citizens to own gold. 10 years in prison if you didn't comply. The government literally confiscated it. By controlling the medium of exchange, they could hide what was really happening. Then they revalued gold from $20 to $35 an ounce in 1934. The government stole 40% of everyone's wealth overnight. But the real damage didn't happen in 1934, it happened after, slowly. Today, most gold isn't held by individuals, it sits in vaults controlled by institutions. And Wall Street created paper gold, derivatives that represent claims on gold that doesn't exist. It's well known that most gold purchases aren't physical stuff anymore. But this paper gold, this fractional reserve system has suppressed gold's price for decades. And that's what Jeff means when he says gold failed.
Gold has failed as a store of value largely. Why? Because it's not a medium of exchange.
It's not that gold disappeared, but that its price has been manipulated and suppressed far below what it should be, because most of it never moves, never gets verified, and can be fractionalized endlessly. Bitcoin could follow the exact same path. Here's how the attack works. And this is literally happening right now. First, they make Bitcoin just a store of value. ETFs make it tax efficient to give your Bitcoin to BlackRock. I mean, there's a very good chance that you own some ETFs or some sort of Bitcoin like this in some sort of ISA, which gives you a tax break. I know I do. Second, they push stable coins everywhere. Here's what most people don't know. Every stable coin is backed by US Treasury bonds, government debt. Bitcoin was supposed to escape the fiat system, but now the bigger Bitcoin gets, the more stable coins people need. Countries all over the world are adopting stable coins. The more stable coins, the more government bonds get bought. Bitcoin's success is funding the very system it was meant to replace. Third, they concentrate Bitcoin into fewer and fewer hands and build derivatives on top. One Bitcoin could represent claims by 10 different people, just like banks, just like they did with gold. As Simon Dixon says,
Wall Street is going to do what they did in 2021, Celsius. That was the beta test. I know people love Michael Saylor. Once you are a public company, you are an asset of Wall Street. And that is the attack. And most people are falling for it.
I really recommend watching this podcast, by the way.
The US is in a major issue with its debt right now. And BlackRock got all of its clients some Bitcoin. They're preparing for this managed transition for universal basic income, Elon's social credit score, Palantir's artificial intelligence technology. That is the future they are managing right now. You've got a choice. Which side of that are you going to be before it's too late?
But here's the scary part. If BlackRock controls most of the Bitcoin, they control the economic majority. They don't need 51% of hash rate. They just need to hold the Bitcoin. They could eventually force a split. We're only recognizing this version of Bitcoin, the one that follows US regulations. Miners follow the money, exchanges follow institutions. Your Bitcoin in self-custody, suddenly it's the non-compliant chain. The rest of the centralized Bitcoin can be owned by multiple people without anyone even knowing, because they're not running nodes. It's exactly what happened with gold. Don't believe me that this is already happening? Look at the transfer from individuals to institutions in the last year alone. So why are smart Bitcoiners falling for this? Because there are 3 traps, and most people are caught in at least one. One is the measurement trap. Every time you price Bitcoin in dollars, Bitcoin has just hit $120,000. You're admitting dollars are the real unit of account. You're keeping the dollar system in power. I do it. Every Bitcoin has done this. 2, the convenience trap. I'll just use the ETF, but 9 of the top 12 Bitcoin ETFs are custodied by Coinbase, one company, one court order away from government control. Celsius, BlockFi, FTX, billions vanished overnight. Wall Street took notes. In January 2024, Bitcoin spot ETFs launched. 9 months later, over 60 billion captured. And Bitcoiners celebrate this. 3, the stablecoin trap. Here's what most people don't realize. Stablecoins like Circle and Tether hold hundreds of billions in US Treasury bonds. Every time you trade Bitcoin for USDT or USDC, you're literally lending money to the US government. You're funding the very system Bitcoin was designed to replace. It's like the rebels funding the empire. And stablecoins are essentially just CBDCs by another name. Decentralized, censorable, and controlled. The fundamental conflict, here's what Jeff realized.
These two systems are incongruent together. One is the free market, prices fall forever. One is prices rise forever. They're completely incompatible.
The existing system has to try to attack Bitcoin. And the attack isn't through energy or nodes or corrupting the unbribable minority. The attack is through us, through our behavior. And the genius of it, we're doing it voluntarily. BlackRock isn't forcing us to buy their ETF. Coinbase isn't making us keep Bitcoin on their exchange. We're just choosing convenience over freedom. And that's exactly what they're counting on. They're not even hiding it. BlackRock's CEO literally said,
"It's digitizing gold in many ways."
Not creating peer-to-peer electronic cash like Satoshi wrote. Digitizing gold. They're telling you exactly what they're doing. Now, some people say, but the ETFs are bringing institutional money and this is good for Bitcoin. And yes, more money is flowing in. But just like paper gold suppressed gold's true use case as a store of value, because it was no longer a medium of exchange, paper Bitcoin will do the same. If Bitcoin never moves, never gets verified, and gets fractionalized into derivatives, the purchasing power will be whatever Wall Street says it is, not what the free market decides. Let me just paint you a picture here. Imagine it's 2035. 90% of Bitcoin sits in ETFs by this point. Lightning Network is abandoned. The US passes a law requiring ETF Bitcoin registration. BlackRock and Coinbase comply. Suddenly, there's regulated Bitcoin and unregulated Bitcoin. Your self-custody Bitcoin, no one accepts it. You can't spend it worth a fraction of regulated Bitcoin. Meanwhile, institutions trade 10 paper Bitcoin for every 1 real Bitcoin. Completely suppressed. Sound far-fetched? Well, that's exactly what happened to gold. Now, it's not all doom and gloom. Bitcoin is different from gold, as I'll explain in a minute. So, is there a solution? 3 simple steps. And if you do only one, make sure it's this first one. Control your keys. Get your Bitcoin off exchanges, off ETFs, into self-custody. If you don't control the keys, you don't control the Bitcoin. Look, I'm realistic enough to realize there are tax breaks involved, but just make sure if you are going to do it, only do it with a tiny portion of your stack. Make sure the main portion is self-custody. 2, run a node if you can. Join the distributed defense and become part of that unbribable minority. 3, I'd argue this is actually the most important one, and hardly anyone does it because tax. You know what I'm going to say. Use Bitcoin as money. Spend and replace. Even small amounts in a year, so you're not having to pay tons of tax. This is what keeps Bitcoin from becoming digital gold in a vault. It proves Bitcoin works. It'll encourage more people to do the previous 2 steps. Run a node and store it themselves. That's it. Self-custody, run a node and use it as money. I have another video that explains exactly how to do these 3 things step by step. Check the description. Look, I've finally done all 3 of these myself. Getting my node set up properly and self-custody sorted out took some figuring out though. But now every transaction I make runs through my own node. I'm part of the unbribable minority now. If you want to do this without stumbling through hours of YouTube videos, risking costly mistakes, I worked with the Bitcoin Way, and they walked me through everything in a few focused one-on-one sessions. There's a link in the description if you want to check them out. They offer a free intro call so you can see if it's actually right for you. But here's why this matters. Every single person who self-custodies, runs a node, and spends Bitcoin makes the attack significantly harder. Every transaction through Lightning instead of stablecoins matters. You're not just protecting your Bitcoin, you're protecting everyone's Bitcoin. And this is the ultimate coordination game, and we're winning if we choose to. You are literally contributing to the first ever global free market if you do these things. And to be honest, I agree with Jeff when he says,
if I choose this, it doesn't matter what everybody else, as long as there's enough people who are choosing this, it's protected.
But it does require action, your action. So now you see the 4 pillars. Energy creates the physical wall, nodes create the distributed defense, the unbribable minority creates the human firewall, and using Bitcoin as money prevents the whole thing from failing the way that gold did. As Jeff says,
but the social layer of Bitcoin, those nodes, that's what Bitcoin is. It's us.
For 5,000 years, we've never maintained free money. But now we have the tool. The question is, will we use it correctly? This is our one chance to create.
It's 8 billion people in service of 8 billion people.
For the first time in human history, we have money that serves us, all of us, equally. No special treatment for big monopolies, there's no subsidies, there's no crony capitalism. But only if we don't repeat the mistakes we made with gold. So the tool works, the question really is, will we? Okay, Mike, I get it, I'll self-custody and use Bitcoin more as money, but what if another cryptocurrency just replaces Bitcoin? What if Ethereum or Casper or some coin that doesn't even exist yet just makes Bitcoin obsolete? Why would I want to go through all this effort if that's going to happen? Great questions. And to be honest, there is zero chance that Casper or any other coin will replace Bitcoin. It's because of something that we see so rarely as humans that we have very little to compare it to. To see what this is, you need to watch this video here. And honestly, this is the biggest light bulb moment I had about Bitcoin. It proves exactly why the meme is Bitcoin, not crypto. You take the blue pill, Bitcoin stays just a digital asset. You take the orange pill and you see Bitcoin for what it really is. I took the orange pill and what I saw made me realize we're not late at all. We're actually crazy early. Before I show you why, here's what made it all click for me. I was listening to Jeff Booth when he said this.
And what Bitcoin is, for me anyway, is an open, decentralized, secure protocol bounded by energy.
Then he said,
that would describe perfectly the first global free market that ever existed when measured from the protocol.
Wait, global free market protocol? That was the key to all of this. But what did he actually mean? Let me show you. There are 4 parts of a protocol to understand before it clicks. First, when Alexander Bell invented the telephone in 1876, could you call your friend? No. Why? Because Bell didn't just invent a device, he created a protocol, rules for how communication works. But the telephone was useless until infrastructure got built. Miles of cables, telephone poles, switching stations. Only then did it become useful. Same with the internet. In 1995, everyone said it was too slow, too complicated, and they missed what was happening underneath. Cables across ocean floors, servers in data centers, fiber networks spanning continents. The protocol was being built in layers. For the internet, first came the protocol, DARPA's APRINET, defining how computers could talk. Then infrastructure got built, cables, data centers, fiber networks. Then additional protocol layers, the TCP/IP for reliable data transfer, HTTP for websites, and then applications, email, social media, streaming, etc. Bitcoin is getting its own layers. First came the protocol, Satoshi's white paper defining how digital money could work. Then infrastructure got built, miners, nodes, and specialized hardware. Then additional protocol layers, the Lightning Network for instant payments or Liquid for faster settlements. Then applications, wallets, Nostr for censorship-resistant social media, Fediment for community banking, all using the same Bitcoin foundation. That's when I realized Bitcoin isn't just digital money competing with other cryptocurrencies, it's the money protocol. And here's what finally clicked for me about protocols. It's not just a set of rules, it's the physical infrastructure that gets built into the real world. These aren't just numbers on a screen. These are massive physical data centers, specialized computers called ASICs that cost millions of dollars, which are machines that can only mine Bitcoin, nothing else. Power infrastructure, cooling systems, security operations, all built specifically for Bitcoin. And Bitcoin's computing power jumped 80% in just the last year. That's like adding hundreds of supercomputers to the network. There are now Bitcoin nodes, independent computers, validating transactions, running in 147 different countries. If any cryptocurrency tried to replace Bitcoin tomorrow, all of this infrastructure becomes worthless. You can't just reprogram an ASIC miner to work on a different network. It's like trying to use a car engine in an airplane. This is the same reason why the internet is a globally used protocol. You can't just lay wires under the oceans for a new internet tomorrow and get everyone to move on to that. That's not software you can copy and paste. That's real-world infrastructure that took years and billions of dollars to build. And this infrastructure is being built regardless of Bitcoin's price. 80% crashes, more miners. Bitcoin goes up 10 times, more miners. But here's what most people don't understand about this infrastructure. Everyone complains Bitcoin uses too much energy, but here's what they're missing. We want it to use as much energy as possible. I know that sounds crazy, but here's why. Bitcoin is secured by energy consumption. The more energy used, the more secure it becomes. Bitcoin's computing power, basically how fast it can solve math problems, is literally thousands of times larger than Google, Amazon, and Microsoft combined. That's what makes it unhackable and so secure. Yet this does mean Bitcoin miners worldwide compete to secure the network using more energy than entire countries each year. But here's the correct question I asked eventually. What cost should it take to secure the first ever global free market? Compare this to our current banking system. Traditional banking consumes over 260 terawatt hours annually across bank branches, data centers, ATMs, physical infrastructure, plus all the energy spent on government policies and central bank decisions. Yet that data isn't even complete. It doesn't include cash printing, armored trucks, or regulatory infrastructure, with staff costs and the full supply chain. Bitcoin consumes 50% less energy than this incomplete banking estimate, while being the entire infrastructure needed to run a currency and payment system. Plus, Bitcoin's energy data is transparent and publicly available. Anyone can verify it. The larger the energy expenditure, the more secure and decentralized it becomes. And here's what a real global free market means. Everything becomes cheaper. Innovation explodes, waste disappears, and zombie companies gone. For the first time in history, the best ideas win instead of whoever has the best connections or access to cheap money. Plus, Bitcoin miners are incentivized to find the cheapest energy possible, which means renewable sources and waste energy that would otherwise be flared or lost. They're literally turning pollution into digital security. So when people complain Bitcoin uses too much energy, they're missing the point. We want it to use energy because it makes our money super secure. It builds renewable energy infrastructure and it cleans up environmental waste. Plus, it creates the first fair global free market where the best ideas win, which will also help reduce more waste and pollution because of these ideas. I'm about to show you why knowing all of this proves that we're incredibly early to Bitcoin still. But first, why is all the infrastructure being built regardless of price? It's because smart money recognizes something fundamental about protocols. And this changed everything for me. We don't have competing email systems, we have email. We don't have multiple internets, we have the internet. We don't have 5 telephone networks, we have the telephone system. However, 2 businesses can both exist and the winner can take most. For example, Apple versus Samsung or Meta versus Instagram. But protocols don't split market share. The winner takes all. And there's only room for one money protocol. Yet Bitcoin is different from every protocol in history because it's the first decentralized protocol that creates and transfers value without requiring any central authority. Here's why this matters. For 5,000 years, money has been controlled by someone. Kings, banks, governments. They could always change the rules, print more, or freeze accounts. Bitcoin is the first money protocol where nobody's in charge. The rules can't change, nobody can print more, nobody can freeze your account. Jeff Booth calls it
first global free market that ever existed when measured from the protocol.
The same rules for everyone, whether you're Elon Musk or a Sparky in Essex. Most other cryptocurrencies aren't trying to replace Bitcoin. They're building different technologies for different purposes. The ones that try to directly compete with Bitcoin as money haven't even nearly succeeded, largely because Bitcoin built the biggest, most expensive physical infrastructure, miners and nodes, that can't be copied or moved to another network. Here's Jeff to explain why there's still so much confusion and noise around other cryptocurrencies.
It would create a whole bunch of confusion because we don't see protocols very often and we see technologies more often. It would be easy to conflate the protocol with another coin and say, I have a faster, better coin. And most people would be convinced then Bitcoin is old technology and the new one would be better. It would be normal that the transition would look exactly like it looks because most people would misunderstand how protocols are winner take all.
It is a protocol that is winner takes all.
They would think they need some other piece of technology without understanding this deep enough because they don't understand protocols nor technology deep enough. And then if you added the point that a whole bunch of venture capitalists and others could get rich by creating exit liquidity on those same people, you would have to create other coins. And a lot of people would fall for that because they didn't understand the difference between protocol and technology.
It's like trying to create a new email system that only works with itself. Good luck getting everyone to switch from the one that already connects the whole world. So the moment you're probably still here for, are we actually early? Are we really at Internet 1995 right now? Back then, the internet was slow, clunky, and limited. People couldn't imagine it replacing newspapers, TV, or shopping malls. But some people saw the infrastructure being built underneath. Every day, more servers online, more connections made, more foundation laid. Then suddenly, everyone just used the internet. Not because we understood the tech, but because infrastructure made it easy. Bitcoin's following the exact same path, but faster. Here's why this is the most important thing happening in human history. Most people think we're too late because the price went from $0 to over $100,000. But Bitcoin isn't competing for a piece of the world's money pie. It's competing to replace all the money in the world, which is currently around $1,000 trillion. And Bitcoin's market cap is only $2 trillion. That's 0.2%. This isn't just a hedge against inflation like gold at 23 trillion. This isn't some tech startup worthy of a few billion. This is literally absorbing all of the world's money. And as long as it stays decentralized and secure, it will continue to do so. Here's what Jeff Booth taught me that changes everything.
These systems cannot coexist. The debt is already insolvent. The debt is lent into existence. It can't allow deflation. Instead of saying it can't allow deflation, insert this, it can't allow the free market. One system has to kill the other. That's really what we're talking about. It's really that simple.
You can't stop infrastructure once enough pieces are in place. And we're seeing those pieces connect faster than ever before. Your children will live in a world built on this infrastructure. The question isn't whether this happens, it's already happening. It's whether we can see it while it's still being built. Look, please don't trust me, verify everything I just said. But this isn't just about internet money, it's much bigger than that. Bitcoin creates the first truly global free market in human history. And this is why your life changes whether you own Bitcoin or not, because you'll live in this new global free market. So now you understand why Bitcoin is the first global free market in human history. Decentralized, open, a protocol, energy bound, secure. Dopes. You know what to do. Self-custody, run a node and use it as money. That's it. That's the whole game. And then that reality is going to turn out to be true. But here's what Morpheus said to Neo.
I'm trying to free your mind, Neo, but I can only show you the door. You're the one that has to walk through it.
I just spent 2 hours showing you that door. The question isn't whether this is possible anymore, because it's already happening. The question is, do you want to be part of building this world, or do you want to keep playing musical chairs in the old system? Look, I still know what you're thinking. This still sounds way too good to be true. But what if I told you real people are already benefiting from Bitcoin in ways that sound utopian? It turns out there are, and you need to watch this video next, where I'll show you exactly how Bitcoin is already changing people's lives, including a barber in Zambia who could afford an education thanks to Bitcoin, despite never owning any or even knowing what Bitcoin is. I'll see you on the other side of the door.